Ever wondered why your hard-earned money seems to lose its purchasing power over the years? This is a question that has left many scratching their heads. The answer lies in the current financial landscape, a complex system that for decades has been dominated by traditional forms of investment such as stocks and bonds. You see, these traditional investments are part of a financial system that is constantly being influenced by a phenomenon known as inflation. Inflation, in its simplest form, is the rate at which the general level of prices for goods and services is rising and subsequently purchasing power is falling. As the cost of goods and services increase, each unit of currency buys fewer goods and services. Hence, the value of your money over time decreases. Now, these traditional investments, stocks and bonds, they're not inherently bad. In fact, they have been the pillars of wealth accumulation for the affluent for centuries. Stocks give investors a share in a company's profits, while bonds are essentially loans that investors make to issuers in exchange for periodic interest payments and the return of principal at maturity. However, the returns from these investments often struggle to keep pace with inflation, especially in times of economic uncertainty. This system, unfortunately, is skewed to benefit the rich, who have the means to invest large sums and diversify their portfolios. On the other hand, it leaves the middle class and the poor struggling, their wages barely keeping up with the rising costs of living. They find it challenging to accumulate wealth and often live paycheck to paycheck. The system as it stands is not inclusive. But what if there was a way to level the playing field? What if there was an investment that could potentially offer higher returns, democratize access to wealth, and provide a hedge against inflation? Well, folks, we are living in an era of financial revolution. In this era of financial uncertainty, a new form of asset has emerged: cryptocurrencies. So, what exactly are cryptocurrencies? In the simplest of terms, cryptocurrencies are digital or virtual currencies that use cryptography for security. They are an ingenious blend of cutting-edge technology and economic principles. At the heart of these digital assets is a groundbreaking technology known as blockchain. This technology works as a decentralized public ledger for all transactions. It's distributed across numerous computers, ensuring the data's security and transparency. Perhaps the most well-known cryptocurrency is Bitcoin, the pioneer that kick-started it all back in 2009. Bitcoin introduced the world to the concept of decentralized digital money, where transactions could be made peer-to-peer without the need for a middleman like a bank or a government. Since then, thousands of different cryptocurrencies have emerged, each with its unique features and applications. One of these is Ethereum, a cryptocurrency that goes beyond the financial use case, enabling developers to build their applications on its platform. Unlike traditional money, cryptocurrencies are decentralized. This means they are not issued or controlled by a central authority, such as a government or financial institution. This decentralization is one of the main appeals of cryptocurrencies. It provides a level of freedom and privacy that traditional banking and fiat money can't offer. With cryptocurrencies, you're in total control of your money. There are no banks to decide the fees you have to pay, no governments to dictate how much money you can transfer, and no borders to limit where and to whom you can send your money. But cryptocurrencies are more than just a new form of money. They represent a fundamental shift in the way we think about finance and the economy. They're challenging the traditional financial system and opening up new possibilities for commerce, investment, and economic growth. Cryptocurrencies are not just digital assets, they are a revolution in the financial world. What makes cryptocurrencies so special is the technology behind them, the blockchain. Imagine a ledger, a record of transactions that is available to everyone and yet is incredibly secure. That's the magic of blockchain. The name itself is a clue. It's a chain of blocks, each block containing information like transaction data. When a block is completed, it's added to the chain in a linear, chronological order. A new block is generated and the cycle continues. But here's the twist. The blockchain isn't stored in a central location. No, it's distributed across a network of computers. We call these nodes. Each node has a copy of the entire blockchain. A hacker would need to manipulate not just one, but more than half of these nodes to tamper with the blockchain. It's like trying to rob a bank that's spread across a city, a country, a continent. Quite the challenge, wouldn't you say? Now, with blockchain, every transaction is transparent. You can trace the journey of a single Bitcoin from the moment it was mined. This transparency builds trust, something that's often missing in our traditional financial systems. But let's not limit blockchain to cryptocurrencies. This technology has the potential to revolutionize a multitude of sectors. Imagine voting systems where every vote is recorded and can't be tampered with. Or supply chains where you can trace the journey of a product from the factory to your hands. The possibilities are only limited by our imagination, and that's the beauty of blockchain. It's not just a technology, it's a philosophy, a new way of thinking about trust, transparency, and decentralization. It's a tool that can redefine how our systems work, making them more open, more fair. The growth potential of blockchain is immense. As more sectors adopt this technology, the demand for blockchain expertise and blockchain-based solutions will only increase. When we invest in blockchain, we are not just investing in a currency. We are investing in a future where trust is built in, not bolted on. With blockchain, we are not just investing in a currency, we are investing in a technology that could redefine our world. Now, why should you consider investing in cryptocurrencies? Well, let's delve into that. One of the most enticing aspects of investing in cryptocurrencies is the potential for high returns. Traditional investments like stocks and bonds can deliver steady, predictable returns, but they rarely offer the explosive growth that cryptocurrencies can. Bitcoin, for instance, was worth less than a penny when it was first introduced in 2009. At its peak, it was worth nearly $65,000. That's a staggering increase. And while not every cryptocurrency will see that kind of growth, the potential is there. Now, you might be thinking that you need a fortune to start investing in cryptocurrencies, but that's not the case. The beauty of cryptocurrencies is that you can start with a small investment. You don't need to buy a whole Bitcoin or Ethereum. You can buy a fraction of a coin, making it possible to start investing with as little as a few dollars. Another compelling reason to invest in cryptocurrencies is the opportunity to be part of a financial revolution. Cryptocurrencies and the blockchain technology that underpins them are reshaping the financial landscape in ways we're only beginning to understand. By investing in cryptocurrencies, you're not just buying a digital asset. You're buying a stake in a new kind of financial system, one that's decentralized, transparent, and potentially more equitable than the systems we have in place today. Of course, it's important to address the risks. Cryptocurrencies can be volatile, and the market can be unpredictable. But it's crucial to remember that all investments carry some risk. The key is to do your research, understand what you're investing in, and never invest more than you can afford to lose. In sum, investing in cryptocurrencies offers the potential for high returns, the ability to start with a small investment, and the chance to be part of a financial revolution. It's not without risks, but then again, what investment is? Investing in cryptocurrencies could be the opportunity of a lifetime. Starting your crypto investment journey might seem daunting, but it doesn't have to be. Imagine walking through an orchard in the heart of autumn, the crisp air filled with the scent of ripe apples, each tree a potential investment ripe with possibility. But where to start? Well, the first step is education. Arm yourself with knowledge, understand the basics of what cryptocurrency is, how it works, its history, and the leading players in the market. There are numerous online resources, forums, and communities where you can learn and engage in discussions. Now picture yourself standing in front of the vast orchard under the autumn sun, basket in hand, ready to start picking. But how much should you pick? This is where you need to decide how much to invest. It's prudent to start small, especially if you're a beginner. As a rule of thumb, only invest what you can afford to lose. The crypto market is volatile and can be unpredictable. Next, you need to choose a reliable crypto exchange. This is akin to choosing the right ladder to climb up the trees. A reliable exchange is secure, has a user-friendly interface, offers a variety of cryptocurrencies, and provides good customer support. Now, you're ready to start picking your apples, but remember, it's wise not to put all your apples in one basket. Diversification is key in any investment strategy, and crypto is no different. Spread your investments across different cryptocurrencies. This can help to mitigate risk and enhance potential returns. Finally, and most importantly, always do your own research and make informed decisions. The crypto market is not a get-rich-quick scheme. It requires patience, strategy, and a keen eye for detail. The future of finance is here, and it's digital. Don't miss out on this revolutionary opportunity. So, grab your basket, step into the orchard, and start picking. The world of cryptocurrency awaits.